Ladies and gentlemen, good day and welcome to the Tiger Logistics India Limited Q3 FY2024 earnings conference call hosted by Rick Capital. We have with us today from the management, Mr. Harpreet Singh Malhotra, Chief Managing Director of Tiger Logistics India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on the management's current beliefs and expectations. It must be viewed in conjunction with the risks that our business faces that could cause our future results, performance, or achievements to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand the conference over to Mr. Harpreet Singh Malhotra, sir, for opening remarks. Thank you, and over to you, sir.
Thank you. Thank you so much for your introduction, and good evening, everybody. This is Harpreet Singh, and I welcome everybody for attending, and thanking everybody for attending today's earnings call. I think you must be in receipt of our results for the Q3 results, and this earning call is in discussion with those results and also how the company is doing and what's our plans and how is the total business looking like. Yeah. So just to start off, I think overall, as far as the logistics is concerned, from our perspective, business has been good. Volume is picking up, though the freight rates in the last quarter were again sluggish. They have not moved up in the last quarter, but thanks to the Red Sea issues, I won't say thanks, but due to the Red Sea issues, there has been definitely an increase in the freight rates. Though we feel that is a very temporary phase, and it's complete. Whatever the emergency surcharges is pass on from our side. So that's been a slight, I would say, business disruption, or I would say, it's a cost which is being passed on to the customers. But overall, I would say economic outlook is somehow, positive and negative. Negative in terms of all the geopolitical tensions which are happening in the globe, where, of course, we get affected because of we are in the international business. And the positive would be that India, is growing as one of the fastest growing economy globally. Yesterday's Jefferies report again, mentions that by 2027, India is going to be the third largest economy in the world, surpassing Japan and Germany, which is again a very, very, encouraging report and statement from their side. And it also encourages us because as we grow, the focus of the world is shifting towards India. The China plus one has become a reality, and people are now, I won't say looking at India, but people have now established that India is going to be the plus one, where the shipments as an alternate supplier they've already begun. So that's something which is a very positive sign for us. Overall, when we talk of India's business globally, I think the volumes are growing, keeping aside small disruptions here and there, but the business sentiments are very positive, and that affects us directly because when these global businesses happen, we are the direct, we get benefited directly. So we are the people who handle those businesses. Coming to the more specific logistics sector, I think you guys, everybody is aware that the focus of the government is to bring down the logistics costs, so that our exports and imports are more competitive globally, which is happening almost every day. The kind of spend which the government is doing on creating the infrastructure to promote a smoother logistics operation is everybody is aware of it, whether it is direct freight corridor or direct rail freight corridors or road movement, which is getting more efficient and more productive, and that is directly getting reflected in reduction of the logistics cost. Though, of course, we've not as yet reached the global logistics cost of cost of around 7 to 8%, but I would say still we are around 12% or so, which is definitely better than, I would say, a few years back where we were close to 14%. So all these things are a very positive sign for the whole logistics industry as such, and we feel that in times to come this will only get better. Looking at some of the disruptions which have taken place, of course, the situation in Red Sea, is being monitored by us very, very closely, where the attacks by the Houthi rebels have put the shipping industry again, in a little disruption mode, because the transit time have gone up, and of course the rates have also gone up, due to, of course, high insurance premiums which are being charged on the vessels, and also deployment of more vessels, because now anything moving from India into Mediterranean and Europe and further to US is now being routed via the Cape of Good Hope. So I think all these things are adding up to the cost, and exports get a little bit more expensive as far as buying from India is concerned. But since everybody knows that it's the force majeure situation, people are accepting it and moving ahead with their shipments. We are very hopeful that another month or so, things will get get solved, and more better efficient ways of logistics will be worked out from this area. Another few highlights I would say that which have happened is our MOU with the Power Pack Holding in Bangladesh. That is the part of the Sigdar Group. So Sigdar Group is a very prominent entity, a very prominent business house in Bangladesh, where they are into various businesses, especially in the port business. They are already in the business at Mongla Port, which is an alternative to Chittagong Port, and they are developing 2 jetties there. And more than that, they are into a lot of other businesses, like into real estate, like into aviation, and also, of course, into hospital business also. So I think this MOU is going to be, it will give us more inroads into our business into Bangladesh, and I hope that this will further strengthen our future growth plans. Another few highlights, as you know, that we've already, decided, the board has already decided and approved the share split, which is from 1:10 ratio. And this is mainly to, make our shares more accessible to the wider investor base, and also, improving the liquidity in the market. So we believe that this strategic move will definitely have a positive impact on our, market presence, and also, contribute towards the development of the whole dynamic investor community. Moving further, as you know, FreightJar, we've been focusing on the digital platform. I think we'll be launching the beta version of FreightJar and by March end or April first week. we've already, whatever learnings we've had in last a few months have been incorporated in the beta version, and we are already, testing. The trials are already happening, and we are hopeful to launch it by end of March. Another few highlights I would say would be, our foray into the government sector, which we have time and time again. We keep on sharing those details with our investors and shareholders on the exchange, through the exchange. I think our foray into government sector is only increasing, and we feel that this will, in coming months, this will only be growing further. On the business front, our focus remains on the same businesses which we have been, business policy which we have already defined at the start of the year. I would say that continues. A focus on imports will be there, which is definitely increasing our footprints in the import segment. Focus into other areas, especially concerning the digital side of the business, is definitely increasing each day. And our, the registrations of people on the platform is increasing each day. So we are very hopeful that with this launch of the beta version, this will definitely go up. As far as our auto business is concerned, definitely this is growing, though auto is sector as such is facing some, I would say, some restriction headwinds. They are facing some headwinds in terms of exchange issues globally. But they are able to, I'm sure they'll be able to find some solutions to it. And because of these headwinds, definitely exports of auto is slightly sluggish, at this point of time. But the kind of investments the exporters and importers have made into this segment, I'm sure they will be able to find some good common platform to come out of these issues. Overall, I would say that the volume growth has been there in the last quarter. I think the TU volumes is growing. Our PAT margin has become better. I would say the PAT margin it's continuously increasing. I think, and that's the result of our better buyings, and that is the result of our bringing in more efficiency in the business. So I think we are very bullish about the whole business, which is how it is shaping up. And, we are very happy that whatever growth engines which we had adopted in last 2 years, they're all working very well, and we are only strengthening those growth engines. And we feel that, in coming times, this will only be, give us more better results and better margins. So I would like to conclude that, I'm very optimistic about, how the business is shaping up. And I'm very hopeful that, coming months, the things which we are doing will bring in more better results. And I always thank the shareholders and always thank the stakeholders who are part of our journey and having faith and trust in us. And I can only thank you guys and for having confidence in our company. And I'm very hopeful that the way industry is looking at Tiger Logistics, the way industry, the credibility of the company is growing each day, and which is also reflecting in our business growth as well. So thank you very much, and I look forward to any questions or any suggestions or any guidance from your side. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Tanush Mehta from JM Financial. Please go ahead.
For the opportunity. I want to ask, what growth do we anticipate for the online platform FreightJar, and what factors will drive this growth?
Yeah. I tell you that FreightJar is a new concept which we have introduced in India. And, though initially, as you know, that in India, the digital adoptability has been very low. But I'm very happy to share that people are very, very, we've got some very encouraging results from the kind of response we are getting from the industry. And people are really willing to adopt to this digital platform. So it's a price discovery platform where you can know the real-time freight rates, and you can book your shipments like just at a click of a button. So you save from if you talk of the whole cycle of getting the freight rates and booking the shipments is 3 to 4 days, but through this platform you can complete cycle within 3 to 4 hours. So from getting the freight rates, booking the shipments, getting it converted, sending the documents, you can do it by the click of the button within 3 to 4 hours, where earlier it would take you around 3 to 4 days. So we are very bullish about FreightJar. We kind of, as I mentioned, that we are launching the beta version by March end. Now we've got a tie-up with ICICI Bank also, as you know. That is another big development which has happened in last quarter. So where we are also catering to the ICICI Trade Emerge platform, where we are being listed as on the logistics company to cater to the logistics requirements of the ICICI customers. So I think that from FreightJar we are looking at very robust growth in coming months, and we feel that this will definitely change the way business is being done. Logistics business is being done in India. We don't want to go the model of any logistics app as such by burning money. So we want to make each transaction profitable. So we are, we don't want to go the way a lot of other logistics platforms have done, like if you talk of Freightwala, or if you talk of I don't want to name such on this call, but definitely we are very, very bullish about the platform, and we hope to get some very, very good growth coming from this sector.
Yes, sir. Understood. And I want to ask, what growth do we expect in the air transportation segment for the upcoming quarter?
Yeah, air, as you know, that we've just been in last quarter we were awarded the prestigious IATA certification. So, earlier we were not able to negotiate directly with the airlines. So now again, we are able to participate in the air business as well. So, our overall air business is growing each day, each month. So even if you see the overall business scenario which is happening in the air freight business, I think it is growing by at least 15-20% each quarter. So I think that is going to continue, and that is something which is a very encouraging for us, because this is the new segment which we which we were not there earlier. So this is a new segment for us, and we are very confident that we will continue to have this growth in coming months also.
Yes, sir. Thank you. Thank you for the wonderful explanation.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Mati Sharma from SK Capital. Please go ahead.
Hello.
Yes, hello, ma'am.
Am I audible, sir?
Yes, ma'am. Please tell me, ma'am.
Thank you for the opportunity. Sir, yes. I have 2 questions. First one is, could you assist us in determining the EBITDA figures for both the ocean and air vertical? And additionally, how do we assess the growth in both sectors concerning volume and margin?
So, ma'am, your question regarding the EBITDA for air and sea separately, I think we don't maintain such data because it's a combined business for us. So there is no system in our organization to maintain separate data for the air shipments and separate data for the for the other this thing. I can definitely give you. If you send us a mail, maybe we'll work it out and definitely share some numbers with you. But yes, we definitely have the numbers in terms of the kg which we are handling. That we can definitely share with you. So if you can send us the mail on this, then we can share it with you directly. There is no problem. And what was your other question, ma'am?
Yes, sir. Could you provide further details on our revenue market share in the North India versus South India region?
Ma'am, we are a North and we are focusing at the moment in North and Western region only. I would say North and West region is, for us at this point of time is what we are focusing on. And South is, we don't have a very big setup and we don't want to spread too thin in the southern market because that is a market where it needs more deeper, knowledge, deeper business knowledge of those areas and those verticals. So we are focusing at the moment only mostly, I would say 80%, 90% of our business is concentrated more on the North and the Western region of India. And maybe 10-15% is from the South region.
Okay, thank you, sir.
Thank you, ma'am.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Disha Patral from Lucky Associates. Please go ahead.
Good afternoon, sir. I have some questions. My first question is, can you clarify the cash flow from operations and whether there have been any capital expenditures during the 9 months?
No, ma'am, there is no capital expenditure on the company. As you know that we are an asset-light company, and as such, there is no capital expenditure, in the company as such. So we would continue to do that, and we would like to operate as an asset-light company only. And even in coming months or quarters, we are not looking at any major capital expenditure in any field, whether it is in warehousing or distribution or any such thing. We are not looking at any capital expenditure on our side. Definitely, we may need more working capital, but we are trying to use our own resources, through our own resources only. And if the business grows, which we are very hopeful of, then we will utilize. We already have the credit lines with the banks, and maybe we'll utilize those credit lines with us.
Okay, sir. My second question is, I have noticed a decline in revenue from quarter to quarter. Is there any specific reason for this, and when do we anticipate this trend to stabilize?
100% there is a very specific reason. I have always explained that we are a cost-plus model, and our total top line is the reflection of whatever billing we are doing. So if you see our past revenues, our turnover was very high. It does 615 crores and then 400 crores and like that. That was because in those years the freight rates were the highest ever in the history of shipping, So that was post-COVID, and we had, major shipping disruption and other things. So because of that, the freight rate, which was normally the freight from India to maybe Mexico, is around close to around $2,500. But in those times it touched around $10,000, $12,000 also. So we were so the freight rate our buying was very high, and same was our selling was very high. So that was reflected in our turnover. But as the freight got corrected, though our volume was growing by 10-15%, but the freight, since the freights were dropping, our overall billing was reduced. So that's the reason why there has been a decline in the freight margins, and definitely this also gets reflected in the profitability also. So that is how I would like to explain it to you. Though the volumes are growing each year, yeah.
Okay, sir. My last question is, how will the new joint venture will benefit us with Power Pack?
Yeah, so Power Pack is part of a very big group, sector group in Bangladesh, where they have been awarded Mongla Port operations for next 30 years. So we plan to, we have decided, the MOU has been signed to set up a logistics business between India and Bangladesh, where we are very hopeful that we'll be able to provide good logistics solutions to the business community between both the countries. And of course, with Tiger's experience and Tiger's capabilities and knowledge, we should be able to collaborate together with Sigdar Group to grow our business. So we have the advantage of India being the supplier, major supplier to Bangladesh, and they have the advantage of that they being in that country, have a very strong hold on the port, also have a very strong hold on the business as such. So the combination of this will definitely bring in a lot of good results for both the organizations, and definitely for us, because for us Bangladesh is a big market, which is a growing market, and in coming times also this will be growing. So overall we look at it as a very positive development for us.
Okay, understood. Thank you, sir.
Thank you, ma'am.
Thank you. Just a reminder to all the participants, in order to ask questions, you may press star and 1 on your touch phone now. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Yes, hi sir, good evening.
Yes, sir.
You said freight rates have dropped, right? Which has led to lower billing and which has led to decline in revenue and margins. So now, so far in this quarter, how have you seen an improvement in those freight rates?
Yeah, now in this quarter, because of the Red Sea issue, the freight rates are going up,
Okay.
Yeah, so not to those levels, of course, not to those levels, but definitely freight rates are going up what it was earlier. There has been an increase of at least $1,000 to $1,500 each day.
So let's say the situation stabilizes, then do you expect the freight rates to correct again?
I don't think so. And I think for another 3-4 months, these would be the levels, what they are prevailing now. Maybe they may go up further.
Okay, and if we, avoid the freight rates and just focus on the volume growth, so what are expectations there? Which will lead to the volume growth overall? So which will
the volume is growing by 10-15% each year, each quarter, and that's what we are also looking at, that the volumes are growing, which is good for the company, because in long run this will only help us, So we are focusing only on the volume, and that's the key for us, because that also shows our deeper penetration in the business, So that is what is important for us, and that's a positive sign for us, that volume and verticals are growing, and which we feel that is a good sign for us.
So you expect this 10-15% level to sustain?
Absolutely.
Okay. And any other key growth levers which the development of the company which you'd like to highlight, which will also help us?
So I would say that what happened, what our tie-up with ICICI Bank is a very big tie-up where we have been chosen as one of the only logistics company in India to tie up with ICICI Bank. And if you Google on Trade Emerge and go on the logistics services, you will find Tiger Logistics as the logistics partner for their customers. So where we are getting close to every month around 100-120 queries, Though they may be, the quality of queries is not that great, but I would say that even from this, even 10-15% gets materialized, that helps us in growing our business. So that's a big thing which has happened for us. More than that, it also establishes our credibility in the market, overall business, that we are a very credible company. That's the reason we've been chosen by ICICI Bank to work for them. And so this one development is a very big development overall in business. Second big development is, when we are our import business is growing in a big way because of the digital platform. So this which was always, if you see my previous presentations and previous discussions with everybody, I always said that the imports is going to be one of the future growth engines for us. So that is where I feel that the growth is going to come from, and which is happening. So I think these two, three things which have happened, which are good for the organization, and they are not all of a sudden they have happened. We've been talking of these things from last, I would say, 1 or 2 years or maybe more, and that now, they've started giving results to us.
Okay. And lastly, any revenue and margins guidance for next year?
I think they are on the better side. I think PAT margins are improving, PAT percentage is improving, and if, God's been kind, they will only be growing further.
Sure. All the best, and thank you.
Okay, thank you.
Thank you. A reminder to all the participants, if you have any questions, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you, everybody. And it's been a pleasure. It's always a pleasure talking to everybody and, discussing about and sharing our thoughts and, of course, taking suggestions and guidance from you guys. So I'm grateful to you for having faith and trust in the company. And I can assure you that, we are really all working very hard and, looking at the whole situation, we shall ensure that we continue to grow both in revenues and in volume, and of course keep on giving, good results to our shareholders. Thank you so much, and God bless. Thank you.
Thank you so much. On behalf of Tiger Logistics India Limited, I conclude this conference. Thank you for joining us. You may now disconnect your lines.